Good morning, Prof.
Hi, Martin. Good morning. Can you hear me?
Yes, I can hear you. How are you
Okay,
doing
fine.
today?
I'm very well. Yourself?
Doing awesome. It's good to have you.
Excellent. Excellent.
I'll just give a bit of intro. We have quite a number of people joining us from LinkedIn and other channels. So I'll just do a bit of intro real quick before we dive into the conversation. But first of all, thank you so much, Doctor, for joining us. Making the time to join us. Can you hear me?
Yes, I can hear you clearly. Yeah.
Okay. Go on my end. Okay. Lovely. So today's conversation is gonna be, and first of all, good morning, everyone, and welcome to this chat. So today we're gonna be talking about the African REIT market, digging deep into a lot of the structural challenges and opportunities also for growth within the market. And generally, when we talk about REIT in Africa, historically you'll find the conversation tilting more technical. So people talk about regulation, tax structures, yield and those sort of stuff. But I believe that there is a very, I think, more strategic and more structural conversation that needs to be had on the market. And that is, what the REIT market is telling us about market maturity for the, broader African real estate sector. And that is why this conversation we're having this morning is super important. And the truth is, beyond capital formation, the REIT market plays a very critical role in driving transparency, market transparency. I was looking at the JLL, most recent market transparency index, and interestingly, over 94% of the African market is considered either opaque or low in transparency. I think only South Africa was able to make, only South Africa ranked, transparent. And I think Kenya and Mauritius were considered to be semi-transparent. So if you look at that data, it tells a story about a very deep problem that we have in the market, transparency problem we have in the market. And there are a lot of things that we can do to drive transparency up. But one of the most important that I've seen is how, capital, institutionalization of real estate as an asset class, and leveraging that institutionalization to raise capital and drive data transparency can help improve, our ranking. So that data is not. Can you still hear me?
Yes, we can hear you clearly.
Okay, so when I look at that transparency data and look at the performance of the REIT market, you can begin to draw some parallels. I said over 94% of the market is considered opaque. So it means that, only countries like South Africa, Kenya, and Mauritius, um, are in a very good place from like a transparency standpoint. And when you look at the REIT market across the continent, South Africa again controls almost 95% of, the REIT market on the continent from a market capitalization standpoint, and also just generally maturity standpoint. So we can see there are a lot of parallels, um, you know, between both data. So transparency is really being highly driven by, market maturity and how, and obviously that market maturity is being driven largely by the REIT segment of the market. So um, in this today's conversation, I think a lot of the things we are going to be talking about will hover around regulation, around scale, around, market depth and liquidity, and also most importantly, operator dynamics across the market. So we will look at who are like the dominant operators. We'll look at who are how our portfolios actually being structured within our context, what sectors are driving growth, in the REIT market. And also we also look at how capital is flowing in the market. And lastly, I think I've mentioned, how important South African market is to the broader continent, and we can see what lessons, we can pick from it. And Prof, again, thank you so much for joining us. To just dive into this conversation, I really like to start from, I think, one of the most important things that we need to look at, which is really the operator landscape. So I'll go into ask, one of the first questions I have in mind. And the truth is, when you examine Africa's listed property market, operator capabilities really are completely different when you compare any other market to the more mature market like South Africa. So in South Africa, you have very self-managed large-scale operators like Growthpoint, like Redefine, who are, actively recycling capital and diversifying both locally and internationally. I'd like to know how important, from your perspective, is the quality of operators within a market, to growth. And just to give you also a bit of context on that as well, if you move away from South Africa and you look at particularly Nigeria, Kenya, or Morocco market, you begin to see some structural issues, limitations from an operator standpoint that is clearly hindering, growth and portfolio, particularly portfolio growth. I'd like you to share on some of the challenges that you are seeing from a regulatory and operator standpoint that can help deepen the REIT market in this segment, and what lesson in this in other African market, and what lesson particularly can we pick, from South Africa, just to dive right into it.
Okay. Thanks, Martin, for inviting me, and also for the listeners as well, perhaps listening on this platform on LinkedIn. Thank you for having me. Just to dive into, I believe I didn't really get the question properly, but I think you were speaking around operators, REIT operators, and
Yeah.
so I think if you look at the REIT landscape in Africa to start with, I think to contextualize it is better. I think to contextualizing the REIT landscape in the Africa, what you realize is that within Africa, about 95% of the REIT market is actually in South Africa. So
Yeah.
majority of REITs in Africa is dominated by South Africa. That's to start with in terms of market capitalization and stuff like that. So now we're saying now 95. Since we're talking about 95%, it means that it's a more dominant in terms of geography is within South Africa. If you look at the other
Yeah.
players in the African continent, the next is Kenya and Nigeria. Nigeria only has 3 REITs. I believe there's the UPDC, I believe SFS, and
Yeah.
the last one, Union Homes, right? And
The,
then
the
we
just one that is backed by the federal government, the
Yes,
M.
the Morphe one. Yeah, the MFI, which is very recent. Yeah, so that's
Very.
very, very recent, just early, just this year.
Mhm.
And that's a real estate fund. I don't know if they classified as a REITs, but they're a real estate fund. I don't know if they're going to actually go through the whole REIT structure and
Yeah.
redistribute stuff and stuff. But they are a real estate fund who are listed. When you look at the Kenyan aspect as well, I think they have about 1 or 2. So you'll find out that South Africa is more dominant in terms of the operators. But when you look at the operators, right, I think now, of course, we need to concentrate. Maybe I'll focus more on South Africa. When you look at the operators in South Africa, right, you'd realize that there are certain characteristics that they tend to have. I think quite a number of them focus on discipline, what you call financial discipline, right? And
Mhm.
so they're very big on your reporting standards. They ensure that they follow the Johannesburg Stock Exchange, the standards set by the GSE. which
Mm-hmm.
meets very strict requirements to be listed on the stock exchange, right? Sometimes you need to then end of year reports needs to be reported every year to your shareholders. And so what it then gives is that you then have a situation where um, the operators, there is a sort of like discipline, right, in terms
Mm-hmm.
of how they even decide on their capital structure. Do they take on more debt, and again, a lot of these things, the first of all is that they, as a REITs, again, you need to qualify as a REITs to start off with. So that's one hurdle that all the operators need to be able to perhaps jump over, and that would include that 75%. Well, in South African context, 75% of your returns must be in property. When you're redistributing your income back to your shareholders, you need to redistribute at least 75%. And so there's a lot of hurdles already that the operators need to be able to conform to. And so I think that really sets rates, and I think it also improves investor confidence, right, in the
On the
market,
market.
and encourages a lot more, I would say, exposure, from coming from the likes of your pension funds, insurance companies,
Institutional. Yeah.
institutional players, right, to invest in that, because the whole point is to bring confidence to the market. And I see you see that is what you see as a characteristics of operators in the market, like South Africa, which is quite, at least you'd say, compared to other African countries, more sophisticated and more mature. And then
I
also
think.
you find, just one second. Also, you find with the operators as well that apart from the financial discipline and also having to ensure that certain criteria are being met, in terms of
Mm-hmm.
their portfolio as well, they tend to be quite, I would say, there's a lot of agility with REITs, in the sense that they're very agile, especially within South Africa, in the sense that if an asset class is not particularly doing so well, they can diversify it, they can sell it off, they can recycle it, sell it off, and then invest in another kind of asset. So there's that sort of agility, right? And then talk about geographical diversification as well. And a lot of these things brings more confidence to the market, because investors can see that, look, these operators understand the game. They're very clear on what they're doing. They're trying to meet investor objectives, which is ideally to sort of optimize returns. It's very, very clear. And then those are what you just see as sort of confidence in confidence in the market, to see a lot of transactions or purchase or investments in this particular vehicle.
Thank you so much, Prof. You said quite a number of things that are super, I think, very, very important, and I'll just pick a few. One of the things you mentioned is discipline, which I think across, even globally, I don't that you can never have a very high performing REIT market without very disciplined operators. First, even disciplined regulators, and because that's really where it starts, and which you clearly highlighted. The standards are clear, the reporting standards are clear, the operating standards are clear, the return and investor relations standards are very clear, and you find very solid, obviously, operators, come into play in the market, which you clearly highlighted. I think every market is just as good as the institution guiding it or running it, and the institution is just as good as the quality of the discipline they integrate into regulation, and all of those things. But you also made a very important point, which is like asset class agility. And I'd like you to just, double click on that a little bit. What are you seeing comparatively from an asset class perspective that is driving growth in South African market? Because honestly, when you are looking at the South African market, a lot of the assets you see, Growth Point, Redefine, and a lot of the other players investing in are very stable asset classes. Your standard office buildings, your standard retail assets, your standard probably hospitality assets, and maybe throwing a few apartment blocks here and there. When you move further from South Africa, you go to Kenya, you are seeing more interesting asset classes. You are seeing Akon investing in student housing, for example, and listing it as as a REIT. And then when you come to Nigeria, a lot more stable, SFS, PDC, the other REITs, they are investing in offices, they are investing in, very stable, I would say stable asset classes as well. But interestingly, South Africa still outperforms the rest of, the continent. And even honestly, very high globally. I think there's just a few markets that beat South Africa's REIT market, even globally. And I like you to talk about from an an asset class standpoint, what are the most interesting asset classes that you are seeing in South Africa, and why are these operators caring about those asset classes compared to the rest of the continent, and what lessons can we learn? And obviously, interestingly, this year the federal government launched the MREIF, which is sort of gonna introduce affordable housing, those kind of structures to the market. And I think um, they have plans to operate it as a full-fledged REIT instrument, and hopefully that will materialize towards the end of the year, sometime early next year. But I'd like you to share from an asset class perspective, what are the operators in South Africa doing differently compared to the region, and what asset classes particularly is driving growth in this market?
Yeah. Okay. I think you've sort of touched on quite a number of, sort of interesting aspects to sort of pick on. I think, of course, when you look at the REIT operators within South Africa, they're quite divergent. I think currently now, I don't know, probably the numbers are always varying because of some mergers and acquisitions and stuff like that. And sometimes some REITs will drop off, or some REITs will drop off the Johannesburg Stock Exchange. But I think maybe we're seeing about maybe about 32 or 33 now. And there's quite a number of REITs ongoing there. But of course, if you look at the more dominant players, right? So you look at the likes of Growthpoint, Redefine, and Vukile, right, which are probably the top three. Then you look at Equities Property Fund as well. Um, there's sort of a divergence or variation in terms of their portfolio. So if you look at the likes of Growthpoint, which is the biggest REITs in South Africa and the whole of Africa, right, they have an exposure to diversified portfolio. So you'd find that within their portfolio, they have retail space, they have office, and they also have industrial. I think what makes just an observation of Growth Point is their ability as well to look at asset classes that may not even be considered as your traditional sort of asset class, and then move into it. And sometimes they would move into it with their exposure. They move it into it a bit slow. I mean, slowly, right? In terms of just trying to balance out their exposure to risk. And so, for example, in the past few years, they've gone into student housing accommodation. And as you know, the student housing accommodation in the market, or especially in South Africa, is that there's a pretty much low risk, and you find that most of the student accommodation have 100% occupancy. It means that you can predict cash flows quite easily, and that's what investors want to see. That's what pension fund or institutional players are usually after, right? Predictable cash flows. And they've also moved into health as well. So you have a student accommodation. Groupon has also moved into healthcare as well. And healthcare is big business in South Africa, right? Because of, especially if you do have a stable employment, your employer require you to get a health insurance. And
Yeah.
actually, it's another cash flow as well, because every month when you work, a chunk of your income is gone to insurance. That's cash flow, right? And that's monthly cash flow, which does not stop, right? And then which feeds into the pension fund or the insurance health insurance scheme. The health insurance funds the health sector. They need hospitals. They need hospitals. They need hospital beds. Hospital beds are cash flows, right? And
Yeah.
so, I mean, some of the REITs I would say in South Africa are quite agile, the likes of Growth Point as well, to quickly see
Opportunities.
opportunity, right? Opportunity for growth and quickly tap into it. And because they already have scale, meaning that they already have existing capital in the form of equity, and they can get debt easily
That.
accessible to them. In South Africa, they can easily get single digit debt, right, from banks, and they have good
Mhm.
relationship with the banks, right? And so that's where you can also scale. You can do scaling, right, on that. So that's the likes of Growth Point, the likes of I would say the likes of Vukile, Redefine, different kind of strategy, right? So the operator have, of course, like Vukile now, they have exposure to Spain, right? Spain and
Yeah.
Portugal, right? About
Mm-hmm.
about as high as 60% of their exposure is outside of South Africa, right? Geographical diversification. And
Yeah.
then you find out comparable to REITs in other markets in Africa, they don't have that kind of scale. Like
Yeah.
Nigeria and Kenya, they don't invest outside of their region. They only have capacity for domestics, right? So you start seeing the differences in operations or an operator style. Then also with Vukile as well, they also focus on not your large scale shopping malls as such, but your kind
Yeah.
of
Boutique.
your smaller convenience, smaller shopping malls that guarantees more trades. Again, the key here is cash flows, targeting asset classes that have cash flows, predictable cash flows, because at the end of the day, that's what investors are interested in. Are you investing in
Mm-hmm.
asset classes that can give me cash flows? So the final operator that I wanted to touch on is equities property fund. Equities property fund, they're exposed to more industrial and logistics sector, right? So they have a
Yeah.
they invest in high quality distribution centers, right, in South Africa and outside of South Africa, in the UK and stuff. And as you know, in the past few years, post COVID has really, increased exposure into this sort of, logistics sort of centers because of e-commerce. A lot of us now, we're actually buying a lot more. There's the convenience of going onto a website, ordering stuff online, and then having it delivered. So a lot of them are also investing in what you call your last mile, the last mile sort of distribution centers, where you need to keep all of these products, right? And so you need to be very close to, I mean, and now they also look using a lot of data analytics. Operators are using a lot of data analytics, right? To say, okay, for example, where do I have my biggest sort of customer base, right?
Yeah.
Let's say my biggest customer base in Santin, right? I can then invest in the last mile, which is maybe 10-kilometer radius to my biggest base, and that's where the
Yeah.
distribution will take place. And again, REITs are moving to perhaps newer sort of asset
Asset class.
classes, which are not less traditional, right, than what we used to know. And again, I think just following the money, right? But I think the key takeaway here is having a more active strategy in terms of agility and not being passive. And I think that's the key difference in South Africa and outside of South Africa, where you find out that REITs in perhaps Nigeria and Kenya, they're very static. They're not agile, right? And I think that's a very big difference in terms of operating differences, as you see within South Africa and outside of it.
Thank you so much for mentioning that. I think you made a very important point, and that sort of even corroborates a lot of the research that we are currently doing. So across the continent, we are seeing new opportunities emerging outside of the traditional asset classes. So we're seeing growth in logistics, like you mentioned, um, companies, both especially global firms, are deploying a lot of money in building industrial bandwidth to be able to, fulfill e-commerce demand across the continent. So that is one. We are seeing growth in data centers based on the data that we are tracking. And data centers is also an alternative sector that is, not the traditional that we are used to. And so we're seeing a lot of capital flowing into the market in the data center space. We are seeing capital flowing into the market in healthcare. And it's not just in South Africa, it's across the continent. We are seeing capital flowing to student housing and young professional housing and older people care homes. These are sectors that were not even a thing 10 years ago, 15 years ago. But we are seeing investors currently actively deploying capital across this market. And it's very interesting that made the example of equity REITs and particularly growth point and how they are beginning to invest in some of these sectors. And clearly, I think one of the first, I would say, maturing subsector within these alternative asset classes is logistics, right? Because there's clear demand, e-commerce is growing, there's shift from your traditional big scale brick and mortar retail to more e-commerce driven retail. And so that segment is growing, it's expanding. The second one is healthcare, because massive population, people needs to be taken care of. Hospital beds are, they are cash flow engines. They are becoming cash flow engines very quickly. And we see that in student housing. I don't think, I can't think, minus South Africa, I don't think there's any university in the rest of the continent that can confidently accommodate 80% of their students or even 70%. And so there's opportunity, in that market for private capital to come in. And I just want you to, from your perspective, touch on this a bit more. What are the most important asset classes that over the next decade, you are sure that there's going to be growth? And I mean the kind of growth we saw in office and retail for private capital to plug into, for REITs operators to start looking at. You've already mentioned logistics, which clearly, and you've already mentioned healthcare clearly, but there are still data centers, there are still young professional housing, there's still student housing, there's still older people's home that I believe is gonna even emerge as frontline sectors over the next decade. From your perspective, where do you think the opportunities are gonna come from?
Yeah, look, you see, like, of course, when we talk about REITs, we talk about institutionalization, right? So we're talking about large
Yeah.
scale deployment of capital, right? And so, I think we already discussed it a little bit earlier, right? Where we talked about, of course, your logistics, right? And so what you realize, like in the past few years, you had Amazon come in. Amazon has come into to South Africa. They've got a
Yeah.
massive distribution center in Cape Town, and then they're really expanding, right? And so these are the big players, right? And so those are institutional scale, what do you call, e-commerce giants, right? And they're already
Yeah.
getting into Africa. The thing about these guys is that when they come into an environment, right, they also want to also work with partners that can scale, and they're looking at experienced partners that can scale at what the
Right.
big scale that they're looking at. And that's why they will then partner with the REITs, to say, look, those guys have scale, they have an understanding of how to give them what they want in terms of their requirements, right? And so you then see that perhaps REITs like equities would have a vantage point to have those sort of discussion with the likes of Amazon, Microsoft, because
Because they're already.
they're already in the business already, and
Yeah.
they can show them the blueprint and templates. We've done, and look, A lot of these guys that come in, they don't really want to waste time. They want to big partner with people that know what they're doing, and they always have a very short timeline in achieving things because the market moves fast. So you need to tap in, move fast, and move quick. Market moves. You already just said this, that 10 years ago, a lot of these things were not there. So surely,
Yeah.
how is it that in a very short space of time, it's already sort of, the market has changed.
Institutionalized.
Yeah, it's
Yeah.
in a very short space of time. So of course we're looking at logistics, as we talked about already. It's going to be a big changer. Of course you've seen that already in Nigeria. Are you seeing these guys? I forgot these guys. There's these guys that are also coming from Dubai as well, where they've invested a lot in your e-commerce logistics. Some of these things are also privately held. Remember, right? They're not also privately held. That they have an opportunity to convert into REITs. But you see, a lot of these things, especially when you look at outside of South Africa, a lot of it's institutional grade. Let me talk about institutional grade assets are
Assets. Yeah.
held by private wealthy individuals. Are
Mm-hmm.
held by even churches. They're held by perhaps um, non institutional, what we call, but they're also institutional. They're
Mm.
actually also institutional. If you look at churches, if you look at big conglomerates, right, they are
Yeah.
institutions, but not in the sense of the real estate investment trust. So, and you see that
Trust.
some of these guys, they do not want to, because for REITs there is a lot of bureaucracy that you need to, a lot of tick boxes, and so some of these guys they rather remain private, than go into like the public REIT market. Then of course we talked about data centers as well. We have a very young population in Africa, and you see that a lot of people are always on the phone. A lot of the younger generation, I mean, you have the likes of we spend a lot of time on Instagram, Snapchat, TikTok, LinkedIn, a lot of things you do, you're always 24/7 on that screen, right? And surely we all know that the data processors and stuff, they need somewhere to be housed, right? And I think that's why you're going to have a big uptake. It's not going to stop. Then talk about student accommodation. What I really want to just say about that student accommodation is, I, I'm a bit skeptical. I know that it's a big need in Africa, but then the issue is that the reason why you may not see it in REITs as such in other African countries is that you need a pipeline of cash flow. You need a pipeline of kind of insurance in a way. And so if you look at the framework or the model that's been adapted in South Africa, you have what we call a NASFAS. NASFAS is sort of the grant guys that would give students loans. The students are
Yeah.
able to use that loan, and that loan does not even get paid to them directly. Sometimes,
Paid to the
sometimes get
school.
sometimes it's paid. You just say, "Oh, who is the university? Who is my what do they call it? Who is my accommodation provider?" And
Mm.
they'll pay directly. Now the issue is that, for example, in an environment like Nigeria or Ghana, do we have an insurance like NASFAS? Because if I'm an institutional investor, I would only go into that market if I'm guaranteed my cash flows. And so I think that is what needs to happen. Do we have a guaranteed cash flow? And you see that institutional REITs or whatever, they would tend to go places where they have that sort of cash flow. So I think that's where, then also we look at healthcare as well. The reason why you've seen like healthcare is growing in places like South Africa in terms of healthcare investments and stuff again is because I explained to you as well that you're mandated, if you're in employment, to have a health insurance, again cash flow. And
Yeah.
again, we need to look at the middle class base. How, first of all, how many people are employed in terms of our countries in sub-Saharan Africa? We need to look at that data. How many people and if you're employed, how much do you pull home annually, or how much do you pull home per month? And you
Monthly.
have to that average monthlies, and that average monthlies will then say how much am I contributing to my health insurance. Again, we're just looking at numbers. We're looking at cash flows and investment. in this sort of real estate asset classes can only happen when there is money being pumped into the sectors. Yeah.
Okay, thank you. And I think you've made very solid points that I would like to just buttress a bit. The data center conversation, I have a very personal belief that the global processing demand for AI and tech is going to be housed in Africa, because think about it, with the unique economics just makes sense. We have the land, we have lower cost in terms of acquiring land, um, running it, the people, we have the people, I mean, we have the talent, we have everything. And I think that over the next decade, even over the next 5 years to start with, we're going to see a very high surge in demand for data centers, because these global giants, AI companies, tech companies, it will be cheaper for them to build their data storage centers, their data centers, processing centers in Africa. So I totally agree with you. There's going to be heavy demand for asset class, for assets in within that class. Then you mentioned something that is also very important. Capital is capital and risk, they work hand in hand. And so from what I've seen, in the market, any asset class that guarantees or the risk investment for capital partners and operators will most likely gain market share. And
Mhm.
you made a very solid point. Student housing, because of just generally how the landscape is across the continent, low purchasing power, lack of insurance, and all of that might be a bit tricky to gain traction and be institutionalized, like you have, I mean, compared to other assets like data centers, where you have a big telco like Amazon or Google telling you that, okay, I can even I can lease this asset for the next 50 years and pay you all the rent upfront. Or healthcare, where obviously across the region we are seeing governments mandating health insurance, and you can have very heavy anchors come on and insure those assets. So I think that's a major thing. And just speaking about this risk, I want us to even look at the landscape in terms of the types of partners we are seeing, and how risk is informing their participation. And I'll give you an example. If you look at South Africa's market, a lot of the capital sources, I would call it, backing the operators that you see, the growth points, the um, all of them, if a lot of the capital sources backing them are pension funds. These guys have patient capital in their portfolio that they've accrued over many years, and these monies, they are looking for very good instruments to deploy them, and you see pension funds backing a lot of these operators. But when you move further away from South Africa, that narrative sort of begin to whistle out. There's not been so much pension fund participation in Nigerian markets, maybe directly, I would say, or in Nairobi or in other markets like you would see. From your perspective, what do you think is really driving this, and why has African pension funds sort of remained extremely cautious in listed property? They'll rather invest, like you mentioned, in assets that they own themselves. They'll rather go buy assets, they'll rather go build assets, and operate it themselves than invest in listed instruments. What do you think is the missing ingredient, between South Africa and the rest of the market? Is it trust? Is it liquidity? Because obviously these funds also, they want to exit when they want to exit, and these markets are not as mature. Or is it just performance? What are you seeing?
I think it's very important question, and maybe one that we should have actually started at the beginning of the conversation, right? Because
Yeah.
if there isn't if there isn't any capital to start off to invest, then unfortunately, the industry would collapse, right? And so I think it's important that who are the major capital providers, right, for REITs to start off with. As you rightly said, pension funds. And pension funds, like I talked about, as again we talk about cash flows, right? Because if you have a thriving pension fund, right, it means that there is liquidity, right? Liquidity,
Yeah.
and the liquidity needs to be, they need to place it right. It needs to be placed because the money is coming in every month, right? And that money needs to be placed. That money needs to be deployed. And so what we're
Yeah.
saying, what we're saying is that within, and interestingly, within South Africa and markets like Nigeria, the exposure is actually similar in terms of the percentage exposure is similar. So, like for example, in South Africa, it's about 1% to, and they're not even optimizing at all, but maybe 1% exposure to real estate, and Nigeria the same 1%. But the issue is now on the
Debt.
sort of,
Debt.
yes, correct. So, for example, the pension asset class in South Africa is about $500 billion or so. And maybe in Nigeria, I don't know, maybe it's about a billion or whatever the case may be. So when you now say 1% of 500
Of
billion or something like that, that's about $50 billion exposure into real estate. If you look at it from Nigeria, maybe 1% of a billion, then maybe like $100 million. So I think the issue here, right, is first of all, this kind of the scale of the pension market is a big issue, right? And it comes also with confidence, right? So again, what we also see in perhaps in Nigeria or Ghana or Kenya is that the pension funds they have more exposure to bonds, like government bonds,
Yeah,
because
because it's
at the
more
end of the day,
stable.
sorry.
Maybe because it's more stable, or
It's the
what do you think?
yield, the yield. So if you look at the yield exposure, like for example, government bonds is double digits in Nigeria. I mean, like going upwards to 15%, 15 to 20%. You can check. So the issue is that for me as a pension fund, why would I invest in real estate when I can put my money in government bonds, which is safer, and I'm going to get my 15 to 20% return? Why am I going to expose myself to real estate? So there's a structural problem in that because I mean it's just simple investment. It's just a simple investment decision, right? I
Invest
mean,
one.
if I ask you as well, Martin, you have two asset classes. One has little or no risk. One has more risk, and the return of the one with little or no risk is higher
Yeah.
than the one with more risk. Which one are you going to go for? I mean, it's just common sense, right? So
Yeah.
until we fix the structural issues within our markets, you know, how can we be ensuring that government bonds are much lower, which means they are less attractive to pension funds for them to invest? And then how can we encourage, because I always say a lot of times that real estate, I think, is the backbone of any economy, because if you can push that money to real estate, you're going to be creating jobs. And it's just the ripple effect, first of all, is the construction stage, right? Some people are going to be employed for that. Then when the people finish constructing, that building needs to be managed. People need to use the space. That's another
So,
wave of employment as well. And that's what they've been able to do in the US, right? In the United States, where the major focus is on real estate. And that's what is pretty much fueling that economy, right? And also expanding it. And so, so I think in terms of that, I think the fundamentals and the structure really needs to change. I think that's the only way that you're perhaps going to see some sort of progress in the market. I mean, so for capital providers, then another thing is also with banks as well. So when you look at capital providers, for me to scale, I need the assistance of the bank as well. I need the assistance of the
Mm-hmm.
pension fund, but the pension fund, they are going to another asset classes that is more lucrative for them. Then another issue then is with the bank. But what is the bank? The bank, if the bank is giving me double digit interest rates, you know, the real estate is not giving me that. So as a real estate investment trust, you're always going to be at a loss. Only if you are able to then secure foreign loans. And those foreign loans are then going to be dollar denominated. They're going to be in dollar denominated, right? And then you're dealing with local
Yeah.
markets. So there's a sort of misalignment. And so those are the structural, I see those are the structural problems that, sort of bedeviling, like, sort of emerging REIT markets in the continent like Nigeria or Kenya. And that is where you see that the South African REIT market is thriving. You can get single digits interest rates when you borrow from the bank, and then the pension funds are very well and happy to invest in the stocks. Pension funds, insurance
Yeah.
companies, and so that's where liquidity, right? Liquidity, and the issue then becomes, when you look at then we ask ourselves questions. Yes, we see that REITs are listed in Nigeria and Kenya, but why is it that foreign investors are not investing in the stocks? Because another issue is liquidity. Because if there's no trading, the stock is just static, right? And there's a lot of there isn't any transaction, there isn't any liquidity. So why would I put my money in a market that is not liquid? Surely I'm going to lose my money, right? There's no trading is not happening. And so those are the fundamental problems
Problem.
affecting
I agree.
markets.
I agree with you, Prof. And I think there are very key things you mentioned that I would like to highlight for the audience to even understand better. And they are very structural. It's just plain investment. I would say investment 101. You
Mhm,
Every investor will be more attracted to an instrument or an opportunity that gives them lower return, higher return, lower risk.
mhm,
Always, always.
mhm,
And operators, they can never really guarantees that until we fix interest rate issues from
mhm,
their capital partners, because it doesn't make sense to take, if you are going to a bank in Nigeria, you're looking at upwards of not just double digits, or you are looking at 35% interest to get money to build and operate a REIT that will return single digits. And on top of that, there's inflation, double digit inflation that you have to deal with. On top of the interest rate that is already high end double digit of like 35%. And if you go to the foreign market to get money, you're now going to be dealing with market volatility risk.
mhm,
Because if you get dollar denominated fund, you need to return the money in dollars. And that's
mhm,
why even beyond even REITs, we are seeing a lot of assets that were built on foreign debt struggling. Not that they are not making money, they are making money in local currency terms, but they can't just compete because, I mean, FX has moved, the market is volatile, it's beyond you, there's nothing you can do. And when you convert that, your 15% yield in the local currency, it pales in comparison to your foreign exposure and requirements. So
mhm,
it is very structural. And I was having a conversation with someone yesterday, and I was telling the person that when you look at most African markets, the real estate, it's almost like the, I don't know, the Noah being in a boat with other people example in the Bible. And the Noah in these boats are like very structural problems that we really cannot grow or um, expand the market if we don't solve them. And so it's
mhm,
very, very important.
mhm.
Prof, please, can you confirm if you can still hear me?
Yes, I can still hear you. Just make another point with that structural issue that you raised as well, is another issue of taxation, right? So, for example, in South Africa, right, the REITs, as long as you distribute 75%, you don't pay taxes. you don't pay your income tax. Then also you don't pay capital gains tax. So capital gains tax, if you sell off your assets and you make any
Mm-hmm.
gains from, you also don't pay any tax. But the issue that is, for example, like Nigeria is, you know, if you don't have if the regulatory framework is not really paying attention on the ground, and and I think maybe that's a job. For example, now in South Africa has what we call the South African SA REITs Association. And the SA
Yeah.
REITs Association is a body of REITs. I think they're about maybe 17 to 20 members. They come together and they, speak to government. The government try to understand what's happening in the industry so that the laws and the regulation that they make, you know, helps the asset class or the vehicle to thrive, right?
To thrive.
And
Yeah.
so, if, for example, in emerging economies or in other, if you don't have, for example, Nigeria doesn't have any REIT association. Well,
Absolutely.
there are only three anyways. So, I
Operators.
mean, when you see a lot of the regulations that does not really is not in favor of the REITs. So, for example, in the taxation issue, you have withholding tax, you have stamp duty, you have this
Yeah.
and this.
Capital gains and all of
Surely,
that.
if you are saying that REITs should not pay tax, all those things should be wiped out, right? Because those are some of the um, regulations that, if it effectively done or fixed, those are some of the things that would encourage more, because we want more volume, we want more transactions,
Mm-hmm.
and that's what would also encourage it. Yeah, so I think that's just something I wanted to touch on as well. That the issue of tax as well. That can
Yeah.
have a big impact on rates. Yeah.
Yeah, I think that makes a lot of sense. I think a lot of the operators for the rest of the region are honestly fighting very difficult battles from like a structural standpoint. And we just go over a few more questions, just to get your perspective. And the last two questions I would like to ask is, so we understand some of the structural, I would say, issues that the rest of the continent is facing, and you can already see from your experience in the South African market how they've been able to solve these issues. So, you know, regulatory things, structural policy things that have encouraged participation from more capital pool, within the market. So pension funds, other people, who are able to aggregate capital and invest in the market. Stable economy that will encourage a stable economy that will encourage this asset to even do well and be able to return capital, um, including obviously inflation, obviously FX, competitiveness, obviously everything that we've mentioned, taxation and all of that. So on one hand, you see a very thriving market, and at the back of that, market are like these structural issues that's already been fixed. But on this other side of the continent, you see these structural issues still being there. I'd like you to just walk us through, from your extensive research, particularly within the South African market, what other African, markets can learn to fix these structural issues so that the REIT as an instrument, as an investment vehicle, can become more attractive. That's one. And on the second side, I think that the depth of capital is so critical. And I think, for Nigeria, for instance, I don't believe there is no money in the market. I believe there is money in the market, but the money is not structured, is not aggregated, it's not um it's not put together into a single vehicle that you can, leverage to do stuff. And I'll give you an example. When I hear stories of, MMM and all of these Ponzi schemes, how much capital they are able to tap from the market based off of people's greed, it's
Mm,
it's it baffles me. So it tells a story that there is money in the market, but in very informal sectors. Very informal, is not aggregated, it's in people's pockets, and you see people buying apartment buildings worth $5 million, worth $7 million. If you see assets that are being traded in the market informally, you see money that is being moved around within the market informally. So it makes me believe that it's not a capital problem. What we lack is trust in institutions that can pull this capital together and deploy it in productivity, which obviously is one key thing that South Africa has been able to do very well. Whether you are talking about having trusted institutions that can attract, FDI that can be deployed in real estate, and trust instruments as well, or whether you are talking of even money from the private sector, money from other local institutional investors, and all of that. So I like you to touch on that, how other African markets can also begin to build institutions and instruments that can, get money from the private sector. When I mean private sector, mostly informal private sector, and that can be invested in the real estate market. And how, secondly, or rather, first, how the structural issues can be solved. So REIT as an asset class can become more attractive both for operators and people deploying capital.
Okay, no, I think that's a very good question, right? I think for the REIT market to sort of thrive, in or what can maybe Nigeria and Kenya learn from South Africa? I think we've already mentioned the structural issues that are pervasive in Nigeria and Kenya already. Um, but I think it's on both. I think you've already raised good points, right? But I think it's on both sides, both ends, and it's the problem is very multifaceted, right? With the different stakeholders, and it's a combination of all the stakeholders coming together to solve the issue. So of course you have the government on one hand, or the regulatory authorities on one hand, and so how are you making the right, how are you creating regulations that could be efficient, regulations that would assist. So it's not it's not a regulation that is to trip rates or whatever, but how can you encourage the development of rates, right? I think once the government, maybe I don't think they really understand how this asset class has the ability to, you know,
Improve the
grow up,
economy.
to improve the economy. I don't think they also sort of grapple with it. They don't really understand it. And I think that is a function of professionals who are close to government that can get the ears of the government to let them know the scale that, or to let them understand this asset class and what it can do, to sort of improve the Nigerian economy. So that's one.
Mhm.
Sort of from the government side, the regulation is very important. You can also regulate in the sense that funding, right? REITs need funding. So we talked about the pension funds. That's one market as well. That how can we, sort of encourage more pension fund participation in participating in REITs. And of course, you cannot force them. You cannot force pension funds, but you can create some incentives. You can create some incentives around it to say, you just create some. Government can create some incentives so that to encourage pension funds to invest more in REITs. You give them some tax benefits or whatever the case may be. So there's a possibility in doing that, right? So that's from the regulatory point of view. From the operators' point of view, which is the REITs operators as well, I think some of them are not agile, and they've sort of decided in more passive investments and not very active. They're not recycling. You need to think about being more active. How can you recycle asset classes? How can you recycle your real estate? But then the issue now is, how do you then recycle real estate in an environment that is not incentivizing you to do that? Because if I'm recycling real estate, meanwhile I have to pay tax, all these taxes that are involved in my
Makes sense.
disposal. You'll be skeptical because you are going to lose. So those are some of the things that can impact. So of course, then we talk about the capital market activity as well. Like I said, in some of these markets, Nigeria, Ghana, you look at the REITs, look at the stock price. You can go and check. For the past 5 years now, it's flat. Just
Yeah.
like this. So then the issue then becomes, it does not give any confidence to any investor, be it
Not attractive.
home. It's not attractive, be it home or abroad, to invest, because where's the price discovery, right? I mean, there's nothing happening. Like, surely in Nigeria, we had a lot of economic shocks, right? You've had the COVID pandemic, right? We've had the issues of currency rate volatility, elections, but this asset class is just flat. So what is driving the price discovery? And for investors are interested in price discovery, right? They want shocks to impact some of these things, because that's where they can do the arbitrage opportunity, right?
Hmm.
That's where you can
Yeah.
make money. But if you just see the flat thing, then why do you want to invest in it? You raised a very important point, which I wanted to address. I'll be honest with you that I haven't really seen any economy that has thrived from sort of individuals just
Informal. Yeah.
just doing their own thing. I've never seen any economy that has had like a massive growth. Like you rightly said, this money needs to be pulled,
Hmm.
and the money needs to be institutionalized. Because you see what, and you raised a very important point. Triple M, what? You see, people lose their money when a lot of these things are not institutionalized.
Yeah.
And because again, what a lot of individuals are trying to do is they're trying to make quick money. But what you have to understand about institutional money is that it's all about scale, and then it's all about your what you call your entry point and exit point. And you see that institutional investment is over a long period of time. And that's
Yeah.
what economy you want to have investments that are long-term thinking, right? And that
Mhm.
money is being pumped in and out. Is when you have investment that is just very kind of a quick fix investment in and out, there's no way that you grow economies through this, right? And so I
Yeah.
think that very, very critical is that we really need more institutional players within our markets to be more engaged with REITs, and maybe REITs as well, in terms of scalability as well. Perhaps there needs to be more mergers and acquisitions. I mean, at the end of the day, when you just look, the scale is just too small. So you can't. I
Yeah.
mean, if you look at the market cap, what if you have one, a REIT is $50 million market cap. I mean, you look at investment from overseas, they're looking at scale. So I want to invest $300 million. I want to invest $200 million. They're
I
looking
want to
at,
invest
so
$1 million.
the scale is not there.
Too
So
small.
I think, yeah, it's too small, and I think I think those are what the market fundamental is. And sometimes I ask myself, um, and this always and I always try to ask this question every time. I always try to ponder to say, you know, are our markets actually ready for this sort of vehicles, this asset class? I mean,
Mm.
it's shown that they're not ready.
Mm.
The markets are not they're not mature enough. You don't have supply of quality real estate that can
Just
generate
not. Yeah.
predictable cash flows, and that's the fundamental of REITs. You need quality asset, quality property that can generate predictable cash flow. You need low vacancies, right?
Mm.
And you also need cost of financing. You need to be able to reduce your cost of financing. You need to work in an environment where the inflation is maybe single digits, because you need to be able to plan. So if you have a situation where you have a high cost of financing, you have high inflation, meanwhile, the cash flow, the rental markets is going at single digits. Meanwhile, your cost of financing is at double digits, your inflation is at double digits. The
Inflation.
investment vehicle cannot work in that sort of environment. And for me, I've really struggled to understand, why this is not picking up. And um, I think it's quite obvious why it hasn't picked up. But South Africa has been an amazing success story because of the history. I mean, the first real estate fund was listed in 1969 in South Africa, and off that, it's come off the gold rush, right? The gold rush, the mining, and they
Yeah.
have actually invested. South Africa has actually invested in, with the banks as well. Created banks. Then the Johannesburg Stock Exchange, which is over $1 trillion in capital, with liquidity. REITs market is the one that trades. It has a substantial amount, about 5% of the liquidity, or the market capitalization. And so I think that the success story of REITs is coming from that historical aspect that has been coming
Yeah.
from South Africa. Yeah.
Yeah. I think, Prof, you've made some very solid points that I think probably needs to be reemphasized before people mix it. It's almost like a chicken and egg situation with the African economy at large. On one end, we we are eager to have foreign institutional investment coming into our market. But these guys, we've not met their requirement. Our market is too small, the asset class is too small, the environment is too complex, for these funds to come in. You have a market that the total REIT market in Nigeria is not up to $1 billion.
No, I think it's just about 100 million or something, or less than $100 million or something.
Yeah, so and you have one investor is looking to invest $300 million, is looking to invest $500 million. So that becomes a big challenge. That's even, internationally. Locally, the environment is not conducive to even grow. So, and we've mentioned a lot of the stuff. You said it: inflation, cost of capital, foreign exchange, volatility. If you stack them, the cost, or rather the risk, is almost 10x the return you're looking at.
Mm.
And any investor, whether private, whether public, whether foreign, whether local, whether it's even whoever it is, will just it will just not make sense for them. It's not attractive enough. So
Just one,
we are.
just 1 second, Matt. I just wanted to come in there and say, look, of course, it's not all doom and gloom. I don't want to be quite negative on that, but I think there are opportunities within the Nigerian market that perhaps we has not been explored, and I think
Mhm.
there are some opportunities where there are cash flows. So, for example, if you look at the some REITs in the US, there are some REITs that focus on the telecommunication mast, right?
Mm.
And so in Nigeria, we have, telecoms is one of the most lucrative businesses in Nigeria, and so you can actually capitalize the telecommunication masts. If there's a company that there's perhaps money coming from outside of the country, and you can just invest in all those telecommunication masts, perhaps buy it or whatever, there's cash flows there because those telecom companies, they're actually paying for wherever you see a telecommunication mast, it's not
They are
free,
paying.
right? They're paying
Yeah.
rent on it. So there are cash flows there. That's one. Another cash flow that I think in Nigeria is quite big is even the oil rigs, you know. Um, but of course, is there another way to also monetize that as well? I think that's one of the biggest. Oil in itself is one of the biggest in Nigeria. Is there any way
Yeah.
that perhaps, because in the US they have the timber, timber industry. There's quite a number of, as long as it's an infrastructure, as long as an
Yeah,
infrastructure
yeah,
that can generate cash flows, then there's an
it can.
opportunity to have a real estate investment trust there. And so I think there are other traditional sort of real estate or infrastructure within like our markets that we're not really tapping into, right? And I think,
Yeah,
again, I think it also depends, like you said, on the market maturity. It seems
yeah,
that, and then another one is the hospitality. In Nigeria, hospitality is big. Hotels are always full. I mean, in
yeah.
Nigeria, and they're usually dollar dominated. They're usually dollar denominated. So, for
The
example,
high
when
end of the
you
market.
go to Sheraton, you go to it's all dollar dominated, like $150 a room or $20 a room. So there's also an opportunity there to have an hospitality REITs. But the
Mm-hmm.
issue now is that I don't think that some of these asset classes that are owned by the private market really want to go public because, as you know, public also means transparency, and I think
Scrutiny.
that's where the problem lies. Yeah,
It's scrutiny. And Prof, it's very good that you mentioned that. And Sean just sent ask a question on LinkedIn, if to get your perspective on if the growth is being hindered by lack of quality assets. I think,
yeah,
and you can chime in, but I think personally that some of the growth, we a lot of the growth we've seen, for instance, in South Africa, is a blend of many things, and part of it is just also the presence of quality stock in South Africa, whether you're talking Cape Town, whether you're talking Joburg or something, or wherever you're talking about. There's quality stock, there's quality office stock, there's quality retail stock, there's quality hotel stock, there are quality logistics centers, being built, and those are like assets that foreign investors or local investors can deploy capital in. But that begins to sort of, it's not at the same scale if you move to
mm,
other markets. Kenya is doing very good
mm,
in terms of the stock of projects, buildings there. But it's, yeah, I think also it's part of the problem, not just even quality stock, but projects that are, or rather properties or assets that are giving, that have very positive, cash flow. Like you rightly mentioned, if you look at the Nigerian economy from an infrastructure and general asset class perspective, the mass you talked about, they
mm,
make a ton of money.
mm,
The oil rigs, they
mm,
make a ton of money.
mhm,
And mineral mining centers, they make a ton of money
mhm,
from exploration and all of those things. But like you rightly mentioned, it is difficult to convince those guys to become listed, because
mm,
obviously
mm.
becoming listed is, you are exposing yourself to public
Of course,
scrutiny.
right,
It's a lot that goes with that. So
right.
just to and touch on that question, and you can speak to it again as well. There's both, it's both a quality stock problem
Mm,
among other things. And I think
mm,
if we can grow the stock of quality assets that we have, that is even appealing to foreign investors who are very, whose requirements are very high. They want to invest in assets that are EHG compliant, that are sustainable, that are of a certain quality and standard, to benchmark, other assets they've invested in other places around the world. So there's also that problem. But the last thing I want you and to touch on, and obviously you can speak a bit more on the stock conversation. I want you to also talk about just generally structural reforms that you believe are critical to driving growth in the market. We've said a lot about how the broader economy impacts performance of real estate as an asset class, and how even some countries with very thriving markets are able to integrate um, or sort of incentivize the private sector to invest in REITs. So you have pension funds being required to invest a certain percentage of their portfolio in REITs. You have and that other direct incentives like the tax waivers, and many other things. I'd like you to touch on first the stock thing, and then lastly structural reforms that you think that if Nigeria can do today, if Nairobi can do tomorrow, Kenya can do tomorrow rather, and Morocco can do sometime next year, will really drive and open up growth in the market and open up, those markets.
Mm. Yeah, thanks, Martin. I think yeah, we talk about the quality of stock. In other parts of Africa, yeah, it's true. It's true that we have some lack of supply of quality stocks. Um,
Mhm.
but of course, I think that perhaps maybe there are some there are currently some asset classes that are doing better than others. So, of course, we talked about the opportunities for your likes of your data center, your logistics, and there are already players already engaging. I think it's the guys I forgot. I think it's called agility or something. I think it's agility.
Yeah,
Then
agility logic.
yes, they're quite involved in Africa as well. So there is like sort of private sort of investments that are already coming in. So the fund, I think the model is that you don't think that you're gonna sort of have buy existing good stock. You need to build
Mm,
it. So I think that's the model that I think would work in Nigeria, where you need to source for funding and then you need to build a quality stock. So yes, I agree. There's a lack of supply, but I think it's something that could be fixed in the sense that as long as I think the critical I would say issue or problem is the funding. I think the funding, right? Like we already said already, where is the funding going to come from? So if you don't have pension funds that are interested, and then you have a government that if someone was investing in my bonds, then why would I want to move that
to
funding
somebody else.
someone else? So I think the government also is in a predicament because if I create another asset class or push investors to move into another class, the Nigerian government is going to lose out because they need
Yeah.
that money as well to do their capital or recurrent, actually to meet a lot of their recurrent expenditure, right? So there's a problem happening, right? It's just paying politicians whatever salaries and stuff, but don't quote me there, right? So I think there's a sort of kind of catch 22, right? Because to them there's a sort of in a way there's a sort of a moral hazard going on there. And so for me, I think the biggest issue is the funding problem. If we can sort out that problem of funding, and then I think that the rates can then have more confidence, right, to borrow money or either use debt. And then remember that for REITs in Nigeria is 15%. Exposure to
Hmm.
debt is 15%. So I mean, if you look at other markets like the US, I think the US now is I think 60% or something like that. So because
Yeah.
at the end of the day, real estate is it's a highly capital intensive asset that you need leverage, right? And so when
Yeah.
you limit a lot of leverage, 15% only, then you say that 85% they need to get it through equity. You're dealing with a market, you're dealing with a stock exchange that in itself there's not much it's not that liquid to start off with, right?
Mm.
The South African stock exchange trades $1.4 billion every day,
Every
daily.
day. Yeah.
$1.4 billion daily. The Nigerian stock exchange, I believe, is trading $50 million a day. So you can see the scale, right? It's not even in comparison. So I think we need to fix that funding issue. That's 100%. Regulation as well, like regulatory needs to change. Taxation needs to change. You need to be soft on REITs in terms of dealing with that double taxation. It's a big problem, right? Um, yeah, and then yeah, so I think those are the things. Then also, I think to be honest with you, investors um, they think about the operator, right? They need to have confidence in the operator. You know,
Mm-hmm.
if I give my money to this operator, are they going to be able to manage it properly? Can they grow? Can they grow my money? So meaning that we never even talked about the trading of discounts to NAV. Like a lot of the
Yeah.
REITs are into NAV to discounts, right? Because there's no liquidity in the market, right? And people are not
Yeah.
trading anyway. So if I'm putting my money in that market that doesn't trade, surely you're not going to give me my money back, right? So it's like I'm just wasting money. So I think these are structural issues that definitely needs to be fixed before you can even think about the growth of REITs in emerging markets such as Nigeria and Kenya.
Thank you so much, Prof. We've run out of time, and while I would have loved us to continue this conversation, I know you have other engagement pros that you need to run through. Thank you so much for the time. I think one key lesson that I would pick personally from what you said last is it seems like there is a conflicting interest. In on one hand, you see the government who have the power to stabilize the economy, fix the structural issues, and but on the other hand, they are not able to do it because it's almost like can you still hear me, Prof?
Yes, sir. Yes, you broke, but
Prof,
yeah, you're back. You're back now. You were breaking, but you're back
yeah,
now.
yes. Okay. So on one hand, you find that the government who are supposed to fix the structural issues seem not even to be incentivized um, to do that, and so it's very difficult. It's a very difficult situation, but I think that if we can fix, like you mentioned, capital problems, if there's more capital, unfortunately, it's more expensive to even build than to buy in most markets, especially in Nigeria. It's more expensive to build new assets in Nigeria now compared to buying. And obviously, that's because of all of these volatility issues, cost of capital, inflation, all of this you have to struggle with. But I think if there is, if we have more patient capital coming into the market, if we're able to mobilize local capital from the informal sector into very structured institutional vehicles that looks very long term on the market. I think we can begin to see growth in REITs, and then much more importantly, even is the quality of operators. If we begin to have more efficient operators in the market, people who will run these assets, people who will make good returns on these assets, people who will continue to, drive these assets as much as possible. I think at some point we'll begin to see the return profile beginning to sort of outweigh all of the challenges and things that the market is currently struggling with.
Yeah.
I'm optimistic personally that we will get there, but it will require very intentional effort and both from the operators, the government, and even the market in general. So,
Mhm.
Prof, I would
Just,
like to
just one
say,
thing, just one thing, Martin. I just wanted to just one last because it's quite interesting. I wish we had more time to speak. I
uh,
love speaking about REITs so much. But what I also wanted to say is that maybe also the REITs in maybe emerging markets, Nigeria
mhm,
and Kenya. I think that maybe they need to start thinking about new strategies. For example, like the partnerships. I'll just give you a case study, right? Quite a while ago, Growth Point and Discovery in South Africa,
mm,
they entered into an agreement, right, where in Santin City, the Discovery Towers was built. I think so. They leased the property to Discovery. Discovery is one of the biggest, or really much the biggest insurance company
mhm,
in South Africa or even in Africa. They then built the development with another, Growthpoint had 55%, with another partner, I think he had 45%. They went into the agreement. I'm not sure if it was a 10-year lease or whether given to Discovery. And February, just the last week, I mean, yeah, February, early this month, The property was sold to Discovery. Discovery said they're going to buy the property off two partners for
I think
four
it
point,
was early this month. Early this month.
yes, over 4 billion rand, over 4 billion rand. And the point here is, how can REITs now start thinking of strategies to partner with organizations that already have money? We'll take up the risk. We create some nice models. We develop. We enter into a lease. But I'm very, very sure that there was an exit strategy that already planned. Of course, we're just hearing all of this now, but I'm quite
Pre-planned.
certain it was already been planned already, and I'm very certain about that. But then the issue now is, my point though is about unlocking capital. Now, growth points have 55%. You can calculate 55% of over 4 billion something. They've unlocked value of 2 point something billion. Now they're going to deploy it
Yeah, yeah.
into now we're talking about those new nice asset classes that we're talking about. They're going to deploy it somewhere else. So now they're being agile, right? They're moving. And I think that's the mindset that REITs in other African markets need to start, I would say, engaging it. But again, the environment that you are working from as well is an issue.
It's very important.
So
It's very
yeah,
important because they were
yeah,
only able,
environment.
yeah, they were only able to exit because, I mean, you are dealing with a very mature capital market. You can easily exit. There are people on standby to buy off assets from your hand. It is not
Yeah,
the same for a lot of it's not the same for a lot of emerging market players.
and
I
that's what
think
I'm actually, and that's what's interesting, Martin. That's what I'm actually saying as well. That we also need to now try to revisit these things. Do we, because some investment vehicles work in other markets, does it mean
Mhm.
that we just replicate it and force it down our own market?
Yeah,
Maybe it's something that we need to start rethinking. Because, to be honest with you, I'll be honest with you, this thing is always on my mind. Like, why is it that REITs are not working in Nigeria or whatever? There's a total misalignment. And so, if there's a misalignment, why is it that we're not sitting down to say, look, this is what real estate, maybe we don't need REITs actually. Maybe we don't need REITs in Nigeria. Maybe we need a different vehicle that needs to speak to our environment. And we have not really sort of engaged with that particular discussion. I think you're frozen, Martin. Yeah,
yeah, bro.
Martin,
Can you hear me?
I think you're frozen. Yeah, yeah. So I'm saying that, look,
Yeah,
it
yeah.
could be that we need to think about real estate funds. It may not be REITs that
Mm,
is something that would fix our plight. We need to think about
yeah.
real estate, and 100% we need real estate funds. But I think we need to really sit down and think about the right vehicle for our environment. It's not every time that we need to copy and paste. So I think that's
I
something that
agree. I agree. And there's even a question on LinkedIn. Someone is asking, I mean, given the volatility issues and local challenges that we have, and how are REITs in emerging markets currently structured, to mitigate them. And the truth is, we are not currently structured to mitigate them,
no.
right? And that brings me back to the point that you raised, Prof. It's very important for us to figure out how to make our market work. Okay, we don't have the capital market, the capital base, to operate at hyper scale like South Africa would. We don't have, buyers waiting for you to offload asset and they take it up. We don't have all of those things. But can we have partnerships where 10 pension funds or 20 pension funds can form a vehicle that can buy assets? Can we have partnerships where there's an instrument that can pull $1 billion from the informal market and build new assets? So can we have all of those? And I think you made a very important point. It's time for us to start thinking about our local challenges locally and finding solutions that can help us leapfrog, because it's almost like we are getting to, there's a tipping end
Mm.
where you can leapfrog your market to and then position it for,
Yeah.
for
I think
global
I think
category.
another thing, Martin, is that of course when we think about, like, if an economy, a capitalist economy, where you want a sort of, like the invisible hand just to go about things. We don't want a lot of interference for government, because sometimes it's not very ideal. I start thinking to myself, if the government said 10% is mandatory, that 10% of pension fund and insurance companies in this market must invest in real estate, is a mandate, we're going to see changes. We're going to definitely see changes. But then, of course, is this sort of this philosophical ideology, right? If we think about capitalist markets, you don't want the government to be interfering too much, because once they start interfering too much, it will now be for their own benefit, because then they can now say, okay, maybe you need to, then they now say, maybe then you need to redirect it to a particular kind of asset class.
Another
You need to start,
instrument, yeah.
you need to start investing in affordable housing only. Then it becomes a problem, right? So I think that's sort of the balancing act, that how can we redirect these funds to, to perhaps real estate, but not to be so prescriptive,
Mm,
but also, of course, when you are dealing with a government that there's a lack of trust, where you are, then some of these things might be an issue, and you don't want the government to interfere too much in the private market. Yeah.
yeah, thank you, Prof. And it's very important that you raised that point. Because of our time, I have 1,001 things I would have said about that, but because of our time, we will wrap it up here. Prof, thank you so much for taking the time. For those joining, Prof has done a lot of research. I think you've literally dedicated your career on African REIT research. And so I think if there are one or two people on the continent that can talk about um, REITs very well, I think we have one of them here. And thank you so much, Prof, for taking the time. I know you are very busy. We'll have to let you go. We
Yeah.
are really, really, yeah, thankful that you
Yeah,
came around.
thank
And
you.
do enjoy
Thank you
the
so
rest.
much. Thank you so much, Martin, for this conversation. I really, really enjoyed it. As you can see, I'm quite passionate about REITs. Anything real
I,
estate, I love it. But, and also, I think, thank you, well done for all the stuff that you're doing as well. I've seen that you've been engaging. I think it's some of the things that we need to get more dialogue in our industry, to speak
yeah,
about all some of these problems. But I think we also need to move from just speaking about it to lobbying, to
yeah,
lobbying, get lobbying the people in authority about this, because it really has an impact on our industry. And then to
yeah.
move away from lobbying, from speaking to lobbying to implementing. And I think that should be the whole idea behind all of these things. So thank you so much for having me, and I appreciate all the things that
Thank
you're
you.
doing as well. Okay,
Thank
bye
you.
bye.
Yeah. Enjoy the rest of the
Cheers.
day.
And
Yeah, bye.
thanks for everyone who I couldn't really see from LinkedIn as well. People that were online, but yeah,
Yeah,
thanks
people
for
are
all the
stable
guys that
minded.
have been. Yeah, thanks for
Thank you,
everyone that
everybody, for
tuned in.
tuning in. Yeah,
All
for
right,
enjoying the rest of the day. Yeah,
thank you so
bye.
much.